Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at Draganfly.
If you find our talks useful, please consider subscribe, like, and comment underneath to support our podcast. And if there's any stock you want us to look into, leave in the comment section below.
So let's get into the analysis.
Okay, so what immediately jumps out from the fundamentals? I feel like there's an inflection point here.
Oh, there absolutely is. And what's fascinating is it isn't just that the top line is growing, it's the shift in what they're actually selling.
Okay.
If you look at Q2 2025 total revenue growth, it accelerated to over 22% year over year, which is solid.
Pretty good. Yeah.
But that number, it kind of masks the real story.
And here's where it gets really interesting, right? The product sales are surging even faster. That's the core thing we need to focus on.
Exactly. In Q2, product sales shot up by over 37%.
Wow.
This isn't just, sales growth. It's proof of a successful strategic pivot.
So you're saying they're moving from a service-heavy model to becoming more of a scalable product factory.
That's it. When product sales outpaced total revenue like that, it's usually the first sign a company is shifting toward a much higher margin mix.
Which is exactly what the market wants to see from a tech firm. And that momentum didn't stop in Q2.
No, it kept going right into Q3 2025. They reported total revenue of, $2.15 million?
And a massive chunk of that, $1.6 million, was just from product sales.
It's a clear signal the market is starting to really absorb their core drone platforms.
And analysts are definitely noticing this. Forecasts for the full year 2025 are sitting around $6.62 million.
Which is a huge jump, almost 42% from 2024 estimates. It suggests the street is finally recognizing that the operational shifts are paying off.
And what about the balance sheet? For a high-growth company, that's always a concern.
Well, they've managed it really intelligently. They raised nearly $25 million in 2025.
So they have a significant war chest.
A huge one. To fuel expansion, R&D, manufacturing, you name it.
And the truly rare thing here is the debt, or lack of it, a 0% debt-to-equity ratio.
Which is incredible for a company scaling this fast. They're funding all this growth with equity, so they're insulated from interest rate hikes and all the leverage pressures that can cripple smaller companies.
Okay, but we have to pivot to the downside. The financials can't be all good news. What about profitability?
And that's the catch, right? That clean balance sheet comes at a cost. While the gross margin was almost 28% in Q3.
Which suggests they're getting better at making their products.
They are, but they still reported a comprehensive loss of $5.4 million for the quarter.
That number sounds a little scary.
It is, but it's the cost of admission right now. The whole bull thesis isn't based on current earnings.
It's all about future potential.
It's entirely dependent on successful execution and future operating leverage. The market is pricing in domination, and that brings us to the second major point, the structural moat.
This is the most critical part of the story, I think. Their advantage isn't just better tech. It's this huge regulatory shield.
It's their NDAA-compliant unmanned aerial systems, or UAS.
Okay, let's unpack that. What exactly does NDAA compliance mean in the drone world?
So NDAA is the National Defense Authorization Act. And for drones, compliance is basically the U.S. government saying your tech meets really stringent security standards.
Crucially,
that it is not made in China.
Which creates a massive, permanent competitive barrier. The U.S. and its allies are actively banning or restricting Chinese-made drones, like DJI.
The global market leader, yeah.
From anything related to government, military, or critical infrastructure.
Think about what that means. The main competitor, the one that often dominates on price, is just disqualified.
Instantly, from the most lucrative and important contracts in the West.
It completely restructures the entire drone market. It just hands compliant vendors like Draganfly this massive competitive edge.
So the question isn't just, do they have good drones? It's how well can they leverage this regulatory gift?
And it looks like they're leveraging it aggressively through some very high-impact partnerships.
Right, targeting three distinct areas: critical infrastructure, humanitarian defense, and major international defense.
Let's start with infrastructure. They secured an exclusive manufacturing partnership with Valkyrie for drone delivery stations.
And this isn't just about flying packages. Valkyrie is building the physical infrastructure, the automated landing pads.
Exactly, the whole ecosystem. And they immediately followed up with a $400,000 initial order.
positioning Draganfly's NDAA-compliant drones as the default delivery system for this new network.
Right. And then you move from logistics to mission-critical stuff, and the partnership with Autonome is just incredibly compelling.
This is the landmine detection and route planning integration.
Yeah.
A super high-impact use case. They expect pilot deployments later in 2025 in post-conflict regions.
If they can prove that concept, it validates their tech for not just humanitarian aid, but also for high-stakes military and defense applications. It massively broadens their market into areas where security compliance is, completely non-negotiable.
But the biggest news, and probably the biggest growth engine, is that three-way Asia-Pacific defense collaboration.
Absolutely. They've teamed up with two heavy hitters, Babcock International and SITEC.
This seems like a textbook move. A smaller tech firm using the scale and reach of global partners to get market share it couldn't get alone.
And Babcock is a defense and aerospace giant. They operate at the highest levels of defense modernization programs.
With SITEC bringing that regional expertise in the APAC region.
So this collaboration just plugs Draganfly's platforms directly into vital programs, everything from maritime security and border patrol to disaster response.
It basically signals that defense and security is now the primary growth engine for the company.
And it's not just an idea. We're seeing real evidence. New orders for their Commander 3XL drone suggest the traction is real.
Okay, so if the fundamentals are accelerating and the strategic mode is being fortified, is the market actually buying this story? What do the technicals look like?
The technicals are just screaming confirmation.
Really?
Yeah, the stock is showing classic breakout momentum. You're seeing sustained higher highs and higher lows, which suggests consistent accumulation.
And how's it doing against its peers?
It's staggering. Over the past year, the stock is up over 70%. It's just crushing the broader Canadian aerospace and defense industry.
That kind of outperformance, it rarely happens unless the market believes the story has fundamentally changed.
Which the NDAA and defense news certainly suggests it has, and you can see that in the price actions. The stock is trading above all its key moving averages.
For the longer-term investor, that 200-day moving average around the $5 to $6 zone is acting as a major support level.
Exactly. And beyond price, sentiment is just undeniably bullish, fueled by that Asia-Pacific defense news and the regulatory tailwinds.
We've also seen a bit of easing from the short side, right? Short interest declined by about 4.4%.
Yeah, some of the bears are starting to cover their positions, but
Still pretty high.
it's still quite high at about 8.7% of the float, which creates this really interesting dynamic.
Right, because if the fundamentals keep getting better, that high short position could actually become fuel for the fire.
A short squeeze, yeah. Those bearish bets get forced to buy back stock, which just amplifies any positive momentum.
Okay, this is all very compelling, but a 32.7 price to sales multiple. We have to talk about the risks. Let's dissect the bear case.
We have to, and that valuation is the primary critique.
A PS multiple that high is usually reserved for, best-in-class cloud software companies?
Exactly. Pure play software growing at 50% a year with insane margins. For a company that makes hardware, even high-tech hardware, this is an enormous premium.
It means the market is pricing in not just growth, but basically perfect execution.
Near perfect execution and future domination of the entire NDAA-compliant drone space. So if that defense contract momentum slows at all,
Or if the market just gets a little risk-averse.
that valuation could compress sharply and very, very quickly.
Which means execution risk is everything. The whole thesis depends on the successful completion of the Autonome pilot programs and scaling that huge Asia-Pacific collaboration.
Any delays, any technical setbacks, any partner disputes, those pose a material risk to the stock.
And there's concentration risk too, isn't there? As a smaller company, they're heavily reliant on just a few huge partnerships.
Very much so. You've got Valkyrie for logistics, Autonome for detection, and the Babcock Tech Alliance for defense.
If any one of those stalls or gets delayed, it would create immediate headwinds for revenue.
The mitigation there, though, is what we discussed earlier. The underlying need for NDAA-compliant drones is diversified across many sectors. So even if one pilot is delayed, another contract might still execute.
So with that high-risk, high-reward profile laid out, what are the most tangible events that you, the listener, should be watching for?
Two things, really. First, the upcoming quarterly earnings release. It absolutely has to validate this momentum.
It needs to prove that 37% product sales growth is sticky.
And scalable, yeah. The second catalyst will be any incremental news from that huge Asia-Pacific Defense Alliance. We need to see specific announcements.
Pilot program milestones, new customer contracts, framework agreements being signed, anything concrete.
Any news from Babcock or SciTech confirming progress will just further validate that defense growth engine. And don't forget the autonomous pilot results.
Right, expected later in 2025. A success there could unlock massive long-term markets.
So when we zoom out, what stands out about Draganfly isn't just its growth, it's how it has intentionally positioned itself as the default option in a market being reorganized by geopolitics.
They're leveraging government policy as a massive competitive advantage. The question you have to mull over is this: is the structural moat they've built wide enough, and is management capable enough to scale these massive partnerships fast enough to grow into that aggressive valuation? Your entire investment thesis really hinges on the answer to their execution. If you found this discussion helpful, remember to subscribe, like, and comment to support Smart Wealth with Joshua. We'll be back soon with another analysis.